We will tell you the 10 money habits that are keeping you poor. If you have any of these habits, then you may lose all your money. Watch this video till the end. Now let's start. Number 1. Spending money uselessly. Many people overlook the impact of small daily expenses like buying coffee or dining out, but these expenses can accumulate over time. Spending just $25 per week on dining out can add up to a whopping $1,300 per year. Imagine what you could do with that money. Pay off credit cards or other bills, perhaps? It is crucial to avoid this bad money habit if you are facing financial difficulties. That being said, the focus here is on what is deemed as unnecessary. That's a matter of personal opinion. Perhaps you eagerly anticipate those cappuccinos, dinners, or movies. All of that can be part of a well-balanced financial life. It is important to incorporate this type of spending into your budget. If you plan ahead and have the means, go ahead and savor the experience. According to the Federal Reserve's 2022 survey of Household Economics and Decision-Making Report, 35% of adults reported that their finances were worse compared to a year earlier. Number 2. Endless payments. Consider whether you truly require items that require ongoing payments year after year. Take into account options such as streaming services and premium gym memberships. Are these desires or necessities? Opting for a more affordable gym can still meet your needs and help you pocket some extra cash. When funds are limited, adopting a more frugal lifestyle can greatly help in protecting yourself from financial difficulties. Subscribe to our channel and also press the like button to know more financial tips to get rich. Number 3. Enjoying a lavish lifestyle with credit cards. It is quite common for people to use credit cards for non-essential purchases. However, it is not advisable to pay double-digit interest rates on expensive clothes and other expensive items, unless you can pay off the card before the end of the month. Credit card interest rates significantly increase the cost of the charged items. Using credit can sometimes result in spending more than you earn. Number 4. Purchasing a new vehicle. Many new vehicles are sold every year, even though only a few buyers have the means to pay for them upfront. However, navigating the world of finance can be quite complex. It's important to note that having the means to make the payment doesn't necessarily mean you can truly afford the vehicle. In addition, when you take out a loan to purchase a vehicle, you end up paying interest on an asset that loses value over time. This further widens the gap between the vehicle's worth and the amount you originally paid for it. Unfortunately, a significant number of individuals end up incurring losses when they decide to trade in their vehicles every few years. Perhaps you are left with no alternative but to consider taking out a loan in order to purchase a vehicle. Do you truly require a large SUV? These types of vehicles can be quite costly to purchase, insure, and keep fueled. If you don't have a specific need for towing or require an SUV for work purposes, buying one can be a disadvantage. When purchasing a vehicle and taking out a loan, it's worth considering options that are fuel efficient and have lower insurance and maintenance costs. It's important to consider the cost of vehicles, as purchasing more than necessary can lead to unnecessary expenses and hinder your ability to save or pay off debt. Number 5. Overspending on your home. When it comes to purchasing a house, size doesn't always equate to better. If you don't have a large family, opting for a 6,000 square foot home will result in higher taxes, maintenance costs, and utility bills. Prior to purchasing a home, it's important to take into account the expenses associated with owning and maintaining the property, in addition to your monthly mortgage payment. Are you sure you want to make such a substantial and lasting impact on your monthly budget? When considering your housing arrangement, it's crucial to carefully evaluate what matters most to you. For instance, how enthusiastic are you about having a spacious yard? If that's your priority, then that's perfectly acceptable. It's important to keep in mind that there are additional expenses associated with maintaining your home, such as hiring services, purchasing machinery, meeting HOA requirements, and covering unexpected repairs. Number 6. Exploiting home equity. When you refinance and take cash out of your home, you transfer ownership to another party. If it makes sense to you, refinancing could be a viable option. Lowering your rate or paying off higher interest debt are both potential benefits of refinancing. On the other hand, another option is to consider opening a home equity line of credit, HELOC. With this option, you can utilize the equity in your home as if it were a credit card. It's possible that you might end up paying unnecessary interest just to utilize your home equity line of credit. Number 7. Not saving money. In April 2024, the personal savings rate of U.S. households stood at a mere 3.6%. Countless households struggle to make ends meet, with no indication of any positive changes on the horizon. Regrettably, this places individuals in a vulnerable situation where every dollar holds significant importance, and the consequences of missing even a single paycheck would be catastrophic. It's definitely not an ideal situation to be in when an economic recession strikes. Just about every financial advisor will recommend having a safety net of 3 months' worth of expenses in an easily accessible emergency fund. Just imagine the impact of losing your job or a downturn in the economy on your hard-earned savings. It could easily lead to a never-ending cycle of debt repayment. Having a 3-month buffer can make all the difference when it comes to the security of your home. Household savings experienced a significant increase during the pandemic. Unfortunately, for many individuals, that savings accumulated during the pandemic has now been depleted for most of the individuals, so start saving. Number 8. Not investing in retirement. Without putting your money to work in the markets or other income-producing investments, it may be difficult to achieve financial independence. Regularly contributing to designated retirement accounts is crucial for a comfortable retirement. Maximize the benefits of tax-deferred retirement accounts and make the most of your employer-sponsored plan. Gain a clear understanding of the time frame for your investments to grow and your personal risk tolerance. Consider seeking guidance from a knowledgeable financial professional to align this with your objectives, if feasible. Number 9. Settling debt using retirement savings. It's worth considering the potential benefits of reallocating your retirement funds to pay off high-interest debt. By doing so, you could potentially save money in the long run. However, it's not as straightforward as it may seem. Not only do you lose out on the benefits of compounding, but paying back retirement funds can be extremely challenging. Additionally, if you're under the age of 59 and a half, you may face a hefty 10% early withdrawal fee. For those who approach it with the right mindset, borrowing from a 401k can be a viable option. However, even individuals who are disciplined planners often struggle to set aside enough money to replenish these accounts. Once the debt is fully repaid, the sense of urgency to settle it typically diminishes. Continuing to spend at the same pace may be quite tempting, potentially leading to a return to debt. To effectively pay off debt with savings, it's important to maintain a mindset of financial responsibility even after the debt is cleared. This means prioritizing contributions to your retirement fund as if it were still a debt that needs to be paid off. Number 10. Lacking a strategic approach. The current state of affairs greatly impacts your financial future. Perhaps you dedicate a significant amount of time to streaming services and scrolling through social media, yet you haven't made any effort to review your financial situation. It's unfortunate, as having a clear direction is crucial. It is crucial to address this immediately. Now you need to know the rules of money so that you can get rich. For that, click on the video appearing on the left side and also subscribe to our channel to stay updated with the latest financial tips and strategies that could make you a millionaire or even a billionaire.